Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with this bullish scenario where we're looking for a 5-wave impulsive structure to the upside, where this move down today is then part of a wave 4 where either the low is in or we expect one more low for then continuation to the upside, looking for this wave 5 where the target area is between the 1.236 over here and the 0.618, which is between 46.1k and 52.2k. Important, however, in this scenario is time, and that is why I have the vertical lines on the chart. These are fib times taken from the high to the low of 2 to the high of this wave 3 to compare wave 2 with wave 4. And it is quite rare for a wave 4 to be 5 times or maybe even soon 6 times longer than a wave 2, which does lower the probabilities of this scenario. Now, if we then zoom in to the lower time frames here, then in the scenario where we expect one more low, we're looking for an expanding flat and then a wave A, complex B, and then a wave C to the downside, where the target area for C has been hit very nicely. And we are now looking for a 5-wave structure to the downside in wave C, where we have a wave 1 and 2 finished, 3 looking for a 4, and then eventually a wave 5. It is, however, important that wave 4 is not retracing too high, but more about that when I open my micro folder, because wave 4 has a maximum target of the 0.5, the 0.618 is an invalidation, which then decreases the probabilities of a C to the downside, because a wave C should be a 5-wave impulsive structure and respect the rules of an impulse. Most common target area for a wave C is between the 38.9k level and the 36.6k level, with alternatively 34.6k also being a target. And you can see we also have the yellow box over here sitting between 38.6k and 39k as some additional support around the 1.618. And then we have some more support levels here between 37.7k and 36.4k. In this scenario here, we already have the low in a WXY flat complex structure, and then this move to the downside being a 3-wave structure in a wave Y zigzag, which then is the end of 4, expecting a 5 to the upside. Now, it has to be said that V-shaped recoveries are very, very rare and never really have high probabilities, but what we do keep an eye on is the 0.618 as mentioned, which I will talk about more when I open my micro folder. Alternatively, if we are looking for an ABC to the downside with one more low, it opens the opportunity of a bigger corrective structure, where over here we then have our wave 1, 2, 3, 4, and eventually a wave 5, where if this turns into a W or a wave A, B, and then a wave C 5-wave structure to the downside, this flat scenario, preferably ending below the lows over here of the range, below 40.1k, can then be labeled as a wave A or W, then looking for a B or X, and then a C or Y to the downside to have a longer sideways ranging structure in a much bigger wave 4, where the target is between 40k and 34.8k, taken from the low to the high of this wave 3, with the invalidation being the 0.618 at 32.4k. Now also here you can see fib times on the chart. These are taken from the high of 1 to the low of 2 to the high of 3 to compare 2 with 4. And because this wave 2 was so incredibly shallow, reaching the 0.382, but very, very long and also complex, it increases the probabilities, following the rule of alternation, that wave 4 can be relatively short but deep. So in this scenario, preferably wave 4 at least finishes after the 0.382, which is at the 31st of January, which then means if this turns into a wave C, the probabilities are high, we are not finished yet, and can expect lower prices to come in this particular scenario, after which we then expect a wave 5 to the upside. Now, the most bearish scenario is a wave 1, 2, 3, 4 already finished and then a flat, and then we have an expanding diagonal in a wave 5, where all of the waves then have to be zigzag structures, ABC up, correction, ABC up, correction, ABC up, where also the corrective structures have to be zigzag family structures. An expanding diagonal, however, is very, very rare, especially on the higher time frames. I'm now on the 12-hour, but let's see the 4-hour as well. It is a rare structure, and this scenario only becomes more probable the moment all of the other scenarios fail. So at the moment, it's just something I like to show you, but it doesn't carry the highest probability at the moment. More locally, this is important. As mentioned earlier, when we look for a wave C to the downside, we are looking for a 1, 2, 3, eventually a range in a 4 and a 5. A good advice is always, after a big volume move to the downside or the upside, to wait for a range to form. It's something that I've repeated consistently as price was moving to the downside during the live stream earlier today. Thanks, by the way, everyone, for that incredible support during the live stream. That was insane. So over here, what we are looking for and keeping an eye on is the 0.618, because if we are looking for that flat scenario, right, in an A, B, and then a wave C to the downside, C has to be an impulse, 1, 2, 3, 4, 5. The 0.618 is generally an invalidation for a wave 4 because it is incredibly rare. This is a target for a 4, so that's why it's red, invalidating a wave 4, which then would increase probabilities. This is a 3-wave structure, and that is very, very important for the scenarios on the higher time frame, because if we are looking at an ABC here and then an ABC, right, then an ABC opens the door for that bigger WXY or bigger ABC scenario, right? But if this move to the downside turns into a 3-wave structure and then a 3-wave to the downside, it opens the door for either a potential long-term triangle where we're going to continue ranging between these levels over here, or it opens the door for a 5 being in, where then we have this move to the downside as a corrective wave WXY, where we do still expect some lower prices. However, if this becomes a 3-wave structure, it increases probabilities as well to still take the high, right? So we take it step by step, but this is why that 0.618 is so important, which is taken, by the way, from the high here to the low. CVD divergences, well, we had the bearish CVD divergences at the top as well. This was the divergence on the right side of the recent high. We also had some small bullish divergences with an order block, but has some lower probabilities. This has now played out, and now we just wait for this range over here, continue to observe the price action and assess the probabilities, including the CVD divergences. We also have some news coming later today, 8 p.m. Central European time, which can increase some volatility. Not that we are short of volatility today, because it's been quite an incredible day indeed. And if we then look at the probabilities of the different scenarios, then I have a little bit of a story here. On the medium time frame, we are at the moment looking still for higher prices to come later, right? Doesn't mean we can go down first, but at a later stage, probabilities are higher to take this high. Reason for this is that an expanding diagonal in wave 5 is very, very rare, which is this scenario over here. And expanding diagonals in general are rare, but also in a wave 5 to end an impulse. And this wave 5 is also a lot bigger than this wave 1. If wave 3 is extended, generally wave 5 and wave 1 have a relationship in price and time, which is between the 0.618 and the 1.618, but clearly this wave 5 is much, much longer, which increases probabilities. This top over here is either a wave B top or a wave X top, meaning the move down is then either a wave Y or a wave C to the downside. And only if this becomes a 3-wave structure might we consider this a potential 5, but at the moment that's not the case. On the low time frame, when we look at this range over here, then the probabilities at the moment would be higher to see a bit more downside to come, because V-shaped recoveries are very rare, and leaving a big wick as well to the downside, well, they tend to get filled based on probabilities and data. As long as the 0.618 locally over here is not hit, right, the probabilities are higher for a move to the downside. The moment the 0.618 is hit, the probabilities become higher that the top of a potential 5 over here is in, and we continue the range between 46 and 40k, or we get a more complex structure to the downside in a WXY, which is probably something I prefer to then also fill the wick over here, the inefficiency that we have to the downside, after which we observe the probabilities at a later stage again, right? We simply look for a range to form. Hitting the 0.618 before taking the lows does increase probabilities to take the highs at a later stage, because then we have a corrective move to the downside, not an impulsive move to the downside, increasing probabilities to take the highs at a later stage. So all of this, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.